Bitcoin just took a huge hit. It didn't just drop, it got triggered. And here's the part that most people don't actually realize. Big crashes like this, they don't just happen all of a sudden. They are clear warning signs based on price action. And in this video, I'm going to cover three main things. Number one, what actually triggered the big sell-off? How do you actually anticipate the sell-off based on price action? And what you need to do if you see something like this in the future? And number three, knowing what you need to do next based on what's happening right now. Because when you know how to read the markets the right way, you won't get surprised. You will be prepared. So let's get right into it. So this is the first trigger. According to Market Watch, the very first domino that set off this sell-off was the surprise announcement by Donald Trump, setting a 100% tariff on all Chinese imports.
President Trump says the U.S. is imposing an additional 100% tariff,
which then triggers a huge market risk-off reaction, which also means all the smart money, the big investors, they're pulling out their money from anything that's risky, which is Bitcoin. That announcement alone caused a liquidation of the century, wiping out billions in leverage position. Trigger number two, the long-lasting rumor about how the US government is trying to get rid of all their Bitcoin holdings. This rumor has been going on for months, and it has caused a lot of fear in the market. However, according to Arkham Intelligence, this was just a rumor and it's not actually real. But the fear still lingers. Trigger number three, and this is fairly impactful because big market makers like Jane Street and Jump Crypto, they're leaving the US crypto market, all because of the regulatory pressure they're facing. When market makers leave the market, liquidity actually drives up. And when liquidity drives up, volatility would increase. And when volatility increases, all the retail traders like you and me will get wrecked in the market. And then there's trigger number four, which is caused by retail traders, the leverage time bomb. According to BitGet Academy, over 600 million worth of position were liquidated within a 24-hour time span. Basically what that means is, a lot of people are on leverage trying to buy Bitcoins, and when price crashes, they get margin calls, the brokers take back their position, and everything just starts selling off, and price just goes down, nosedive, free fall. So basically what that means is a lot of people were buying Bitcoin on leverage, and when there's a huge drop in the market, everyone was getting their margin calls, their position got taken back, and everyone is forced selling effect, creates a chain reaction, pushing the markets down even further, and now almost looking like it's nosediving all the way down to hell. Okay, so for a lot of you, those kind of stuff are all mumbo jumbo, right? We're all traders here, me included. I'm just trying to understand, why things are moving the way it is, and I want to share with you what actually caused those reactions. Based on price action, we can actually see how things were going to fall apart way before news like that got released. So let's dive right into it. Okay, so to really get a feel of understanding the warning signs and how things are actually slowing down, we first need to understand these two main concepts, differentiating between a pullback and a dip in the market. So I'm looking at Bitcoin here on a weekly time frame. So we will start with something like this. So let's go back to 2017. Now in 2017, we have a huge bull run, okay? Now in this bull run, we see a couple of different things in the market. Now for the untrained eye, this is just one huge move towards the upside, right? However, there is a few more things that you want to be taking note of. In this move towards the upside, there is dips and there is pullback. What are the dips in the market? Dips are something like this, where price just goes up, couple of candles coming down, and then just resuming the move up. Dip in the market, couple candles going down, resuming the move up, a dip in the market, then resuming the market, right? These are what people usually call buying the dip, right? That's what we are trained to do at UF Trading. Basically, looking at dips in the market, dropping down to lower time frame, looking for actual pullback, and then looking for the buys. Those dips in the market, they can continue on and on and on until they lose momentum, and then an actual pullback starts coming into the market, okay? So this right here, when we push towards the upper side, we have one red bar coming down, and then this may look like a dip at that point in time, trying to move up, but very soon after that, price collapses. all the way towards the downside. Now, what you can also see in this situation is we have created an SNR in the market right around here. That SNR in the market is going to cause traders to start thinking that we are now in a bear market and we should start selling. After this dip fail, a pullback officially occurs. A pullback is when there is sellers starting to really come in and sell in the market. So all of this are actually sellers trying to push price down lower. Okay, we do not want to care about any of the fundamental analysis right now. This is purely price action. And when you have sellers coming into the market, it's going to take a longer time before the trend actually continues. However, when the trend actually continues, it goes for a long time. Like what we have here, price resuming the uptrend after this pullback, making its way all the way up to around about 65,000 at all-time high at this point in time, right? So that's the difference between a pullback and a dip in the market. And there is a very basic price action logic behind it. If we have a move up, a dip in the market, a continuous move towards the upside, a dip in the market, continuous move towards the upside. Now, just think in terms of buyers and sellers, okay? In order for us to buy, we need sellers to come in for us to sell, right? So if a market just continues to go up and up and up, there's just no more sellers in the market for the buyers to continue the buy, right? So what needs to happen in the market in order for bigger players, bigger funds, bigger cash to come in to resume the uptrend? The market needs to go into a downtrend first, which means price needs to come back down like this, inviting more sellers. And when selling actually occurs, price is gonna go down. Again, as more sellers come in, there is more opportunity for the bigger player to resume the buy, buying off the position from the sellers to resume the uptrend. And that's why when we have a pullback followed by a move up, usually this move is gonna be a lot more stronger and can sustain the trend a lot further. That's why we need pullbacks in the market. So having that said, let's have a look at all of the pullback that happened all the way from the beginning of time, right? Let's start with 2013, when we actually have our first pullback, the first introduction of Bitcoin back in the early days, where we actually have an SNR in the market right here after buyers try to go up and then fail towards the downside, creating a short-term situation where sellers are thinking that it's a sell market. These are areas where the bigger players are going to come into the market to pick up all the sell orders to resume the uptrend, right? So from there, we actually see a resumption of this uptrend all the way up towards 1150, round about that. And from 250, that's pretty much a 368% gain, right? So what I'm trying to measure here is from the last pullback that we actually see in the market, which is right here, how far did the next higher high actually make its way to, right? So if we continue to look at this, right, the first move, let's just say 350% towards the upper side. And if we look at the next pullback that actually happened in the market, which is all of this right here from 2014 all the way towards 2017, when the next move actually started breaking to new highs, we can pretty much see that this push towards the upper side, that's where a huge craze happened. And from 1100 to the next high, before the pullback actually comes in, which is right around here, we are looking at almost a 1600% increase. That's a huge increase, which would make sense because your neighbors are talking about it, your grandma's talking about it. We all remember this point in time in 2017 where it was Bitcoin craze at that point in time. So just comparing the two highs, we went from 350% all the way up towards, let's just say 1500%, right? So a huge increase in the market, right? So if you keep track of this, the next pullback actually comes in 2018. We have a huge set of pullback coming in here, inviting a lot of sellers, and then again, buyers trying to pick up their buy orders around areas like this. And this increase, surprisingly, is a lot smaller. If we look at this high to the next actual pullback that comes in, which is right around here, that's actually a 233% increase, drastically smaller than what happened in 2017. That's actually a small concern that you should have when you're trading Bitcoin, or if you're trying to simulate the explosiveness that happened in 2017 because we're not seeing the same type of growth anymore. Now, some of you guys may be wondering, why are we not looking at this high here? Because again, that's just a dip in the market. I am comparing the highs from one end to the other end before the next pullback happens. So this right here is when the pullback actually happens. We see this going up, a dip in the market going up, a dip in the market, and then things are just turning around, making support and resistance here, causing sellers to actually, come into the market, right? So we have another pullback coming in the whole 2022. And let's just look at 2022 here. 2022, again, we had a huge pullback from 2022 to 2023. And once we have broken out to new higher highs, let's actually have a look at the increase in terms of percentage. And that's right around here because we see price going up, a dip in the market, price going up again, and then creating a support equals resistance right around here. So this increase, just visually, you can sort of imagine that it's actually pretty small. So if we actually measure the high end from this to this, we're just looking at a 60% increase. We can definitely see that things are shrinking. And from here, when we actually get our next pullback, which happens really, really quickly right around here, where the price end up going? Just all the way up here. We're just looking at a 15% increase. So you can see in the beginning, things were really exploding, going really, really fast. And then each pullback, after another pullback, things just starts to shrink, right? The high starts to make less higher highs and things are just starting to contract. And that's a very, very, very simple way to understand how strong or weak the trend is getting. That's actually something I covered in the Pip to Profit program. You can actually get a free preview of the program in a worksheet format. It's absolutely free. Just check out the link in the description box below. I'm sure a lot of you guys are probably saying, yeah, we know things are shrinking. Yeah, well, okay, so what can I do with that information? So let's move on to the final piece of this video. I'm going to talk to you about what you want to do and what you can actually do in the market right now to take advantage of how price is dropping. Okay, so first of all, we know things are still in an uptrend. So that's all good. We are on a very, very high time frame and things are still trending towards the upper side. If I pull out my moving averages, you will see that we're still going up. Right here, I have the 75 EMA and the 200 EMA. They're still pretty much pointing towards the upper side. So we are still in a very, very strong uptrend. So that's all good to me. I know that I want to look for a buy in the long term, but the question is, how are we going to buy this? So knowing that we're in an uptrend, what else can we do? We can also see that there is a channel actually forming in the market right around here. I can draw this channel just like this, right? It's a pretty much pip perfect channel looking just like that. We are actually at a position where things could turn around right here. Those are all the technical analysis that I'm doing, right? I'm seeing that, there's a channel going up here. We are crossing the moving averages. This is going to cause people to look for the sells and potentially turning things around. And here's why. If we really focus on the price action here, remember what I was saying before. As price is going up towards the upper side, we have this area of support equals resistance that got broken through towards the downside. Now, when this thing broke through towards the downside, everyone else is going to be thinking of a sell, right? Which we see happening right here. Why are they thinking of the sell? They could be using the same technique that I was talking about, seeing that each high is getting smaller and smaller and they are anticipating that things are turning around. That could be one. Or it could just be traders looking at this huge support equals resistance that's forming in the market and they're looking at a potential bear market coming in looking for a sell. Either way, we see sellers are selling in the market right around here, right? This sell wasn't able to sustain long and then got pushed towards the upper side. Now, I want you to think about what just happened to the sellers that were selling right here. Those sellers that were selling right around there, they are trapped in the market. The position they're in, they're now in drawdown. So any sell position that's trapped here might find a reaction right around here. Because what are those sellers gonna do when price comes back into this area? They're gonna try and release their position. They're gonna get rid of their sell position. Because put yourself in the position of a seller. I'm sure you have been in situations where you're selling the market. Price just doesn't go down, it goes up, putting you into drawdown. And the only thing you are hoping for the market to do is for price to come back down into your entry so that you can get out at break even. So that might happen right there, okay? That's an area where we wanna be looking out for potential rejection. You could also look at that same area and use logic like supply and demand and calling that a potential demand area where price is going to bounce out from, right? That's a more technical term, but I prefer to use the trap analogy here where there's a high possibility where things are going to turn around right there. So there's a few more things you want to be considering when you're looking at this, right? It's not just because that price is here, you want to be looking for a buy. We also need to consider that what has just happened right here, is an actual pullback. Why? Because we created a support equals resistance right here where traders were trying to buy, and then this push towards downside is also going to cause a lot of sellers to come in once a pullback happens. So the ideal scenario here would look something like this. A reaction from this trap area, a release towards the upper side. From this SNR, try to sell again. If they are unable to sell, then a potential move towards the upside may just resume, and we may see a resumption of this channel and potentially a move towards higher highs after that. However, this area right here is not enough for me to say that the buys are going to return. We want to first see what this area is going to do, how strong the buyers are going to be, and see the response from the sellers from the opposite side. If the opposite sellers aren't able to do much, i.e. stopping and making a higher low, that's potentially a buying signal that tells us the buy could resume. And if we really look at the channel here, we might just be reacting off the bottom end of this channel to move towards the upper side. So right now in this current state, I would not suggest buying or selling, okay? The actual sell would actually occur once price comes back here. If price comes back there, you could position yourself for a short-term sell-off in this area just to see how far the sells could go. It could go and cascade down lower, we do not know. But that's an area to sell. However, this right here is not an area to buy because that's pretty much buying what looks like a falling knife. Unless we see a huge rejection right here, and then we could try and scalp the market trying to buy as price goes up. I have a complete video about scalping, check it out right here. So those are the scenarios I'm looking at Bitcoin right now. Right now, if you're a trader, I wouldn't suggest trading it because things are looking really volatile. And if you're an investor looking at something like this and you're already in the market, I wouldn't panic, right? I want to see what happens next. So here's the real message. Price action doesn't fly. The chart was actually signaling this all along. If you know how to read them, you don't just survive moves like this. You take advantage of them and you trade them and be prepared for the next step. And that's exactly what I teach in the Pip to Profit program. How to look for setups clearly, how to manage trades when things start to look ugly, and how to get out of the markets when things looks like they are falling apart. Now for a quick preview, you can always pick up the free worksheet that I have put together. It's called the 6-step trading hack. So if you want that kind of edge in the market, check out the link in the description box below. No strings attached. It's a completely free worksheet that you can get right now. If you like this video, hit the thumbs up button, subscribe if you haven't already, and I'll see you on the next one. Cheers. Bye for now.